what price targets do you have for Bitcoin? Everyone loves this.
Yes. So we are in print. Our base case is 650,000, but that base case was set before the SEC approved the Bitcoin ETFs. And so we are more convinced now that our bull case of 1.5 million by 2030 is the more likely case.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Cathie Wood shares his new prediction for Bitcoin price. She also explains the recent market sell-off, its causes, and what to expect next.
I think partly it's technology, that there's discomfort. You know, Warren Buffett famously has said, if I don't understand it and I don't understand most technology, I'm not going to invest in it. Now, he did invest in IBM kind of at the wrong time, so that proved, to reinforce what he was saying. However, he didn't give up. He did invest in Apple, and that's been, a grand slam for him. So, but very little interest in technology, and a lot of people pay attention to him, especially more value-oriented investors, where, in technology, you've got very often you have to invest aggressively. A company has to invest aggressively in the short term, forgo short-term profitability in order to be able to scale longer term in this new technology. Value stocks tend to be, what you see is what you get immediately. So there's a little bit more faith in the future, I would say, when it comes to tech investing. And, maybe, I'm certainly over 50 and, I'm all about technology. So a bit of maybe an exception there. But I do think there's just a general discomfort, especially because they lived through the tech and telecom bubble and bust. And they weren't looking at it with the perspective I just shared with you, which is, okay, these seeds were planted back then. They weren't ready. And so if you weren't doing the kind of research we're doing in terms of trying to figure out when technologies are ready for prime time, then they were going to get hurt. And a lot of people did get hurt back then. And so that's a memory. Losing money is painful. It's, I know there are studies, you probably know the studies, where it's much more painful to lose money than it is enjoyable to.
The crypto market has just clocked its largest three-day sell-off in almost a year, briefly shedding as much as $510 billion since August 2. The sharp crypto sell-off arrived amid faltering performance from equities, with the S&P 500 falling as much as 4.4% in the same time frame. The market stumble has been led by weak employment data, slowed growth among major tech stocks, and revived fears of a recession. Several major companies, including Microsoft and Intel, posting lower than expected Q2 results, and market leader NVIDIA battered by expectations of impending rate cuts in September, something that has seen capital flow back into smaller, lagging companies. The last time crypto sold off this sharply over a three-day period was in mid-August 2023. Several market commentators have also looked to a spate of selling from Jump Crypto as an aggravating factor, with the trading firm offloading hundreds of millions of dollars in assets from their books in the last several days, per Arkham Intelligence data. The Crypto Fear and Greed Index, an indicator that tracks market sentiment toward Bitcoin and crypto, has fallen back into fear and currently displays a score of 26 at the time of publication, according to Alternative.me data. Moving forward, the crypto market is staring down the barrel of another tough week, with much of the losses incurred over the weekend needing to be bolstered by an uptick in spot and derivatives activity from traditional financial institutions. Bitcoin has entered the CME gap, but technically, it can only be filled during TradFi trading hours. Keith Allen, co-founder of Trading Resource Material Indicators, wrote in his latest X post on August 4.
The third way to think of Bitcoin, so we've got technology, global monetary system, and a new asset class, which is why we are really excited. And, you know, the ARC21 shares Bitcoin ETF is a good example. We have enjoyed tremendous inflows, and I'd like to think it is because we wrote our first piece on Bitcoin in 2014. We've earned our stripes. We had our first white paper with Art Laffer, Could Bitcoin Serve the Three Roles of Money? That was 2015. And then we wrote our second white paper, Bitcoin, Ringing the Bell for a New Asset Class. That was 2016. And finally, the SEC approved earlier this year a Bitcoin or many Bitcoin ETFs. So we think institutions have not moved very aggressively thus far into Bitcoin. Why? It's because they need to do their due diligence. They need to. We've spent 10 years doing this, so we're very comfortable. You know, if you look at BlackRock, for example, until I'm going to say 3 years ago, BlackRock was pointing to the, you know, negatives associated with Bitcoin. And then, of course, there was the conversion. And fantastic. I think BlackRock has done a lot for this movement of Bitcoin into a new asset class. But we've barely begun on that. So, and each one of these words is important. It's the first, global, private, meaning no government oversight, digital, decentralized, rules-based monetary system in history. It is a very big idea, and my former professor, now friend, Art Laffer, couldn't be more excited. He's about to turn 84, and this has rejuvenated him because he says, this is an opportunity to go back to the U.S. pre-Fed, so pre-1913, when we were basically using private money. So it will give the dollar a run for its money, so to speak.
Yeah.
The synchronized yet more severe decline in Ethereum suggests market-wide factors affecting both assets, with Ethereum impacted more. This steep drop could be due to sudden market sentiment changes, significant news events, or other external factors. Several factors are contributing to the current crypto market crash. Decreasing odds of a Trump presidency, recession fears, a stock market correction, and geopolitical tensions are all playing roles. Additionally, the yen unwinding, jump unwinding positions, GOX distributions, and recent pumps trapping fresh longs are notable contributors. Altcoin dispersion adds to the complexity, creating a perfect storm for the crypto market. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.